When you think about trading, what's the first thing that comes to mind? For most of us, it's what to trade. But what if I told you the real question, the most important one, is how you trade? Are you a sprinter, built for short, explosive bursts? Or are you a marathon runner, in it for the long haul? Today, we're going to figure that out.
You've definitely heard these buzzwords thrown around, right? Day trading, swing trading, scalping. They sound complicated, maybe even a little intimidating. But really, they're all just different ways of answering one simple question. How long are you in the game?
It's easy to get lost in all the flashy charts and blinking numbers, but underneath it all, trading is really a world of different styles, different strategies, and, this is the big one, very different levels of risk. So today, we're going to draw you a map of that world. But hold on, before you even think about putting a single dollar on the line, there's a step you absolutely cannot skip. Think of it like, well, spring training for the financial markets. It's this fantastic thing called paper trading, and it's basically a stock market simulator. You get to practice buying, selling, the whole shebang, but with fake money. It's all the experience with absolutely none of the financial heartbreak.
So what's the point? Well, it's all about getting the hang of things. It lets you get comfortable with how a trading platform actually works, you can test drive some wild new strategy without risking your rent money, and you build real confidence. Seriously, it's a must-do for rookies and even for pros testing something new.
Okay, so let's say you've done your homework, you've paper traded, and you're feeling ready. Now comes the first real choice you gotta make, and it is all about the clock. This is where your trading identity really starts to form. And I love this analogy. Thinking of it like a race just makes so much sense. Scalping, that's your 100-meter dash, an all-out explosive sprint. Day trading is more like a 5K. You gotta pace yourself. And swing trading, yep, that's the full-on marathon. It's all about endurance. And you can really see the difference here. Just look at the time frames. Scalpers are in and out in seconds, maybe a couple of minutes. Day traders are looking at a few hours. And swing traders, they could be holding a position for days or even weeks. And that one choice, it changes everything. So let's talk about those sprinters, the scalpers. Their entire game is volume. We're talking about making tons of tiny trades just to skim a little profit off the top of each one. It's high octane, it's intense, and you have to make decisions in a split second. A day trader, on the other hand, is a bit more patient. They'll make fewer trades, letting them play out during the day, shooting for a bigger win on each one. So what's the big dividing line between a day trader and a swing trader? It really comes down to one thing: overnight risk. Day traders are disciplined. They close out everything before the market closes for the day. No exceptions. But swing traders? They're the ones holding on, sometimes for weeks, trying to catch those bigger market swings. Okay, but what if all of that sounds, I don't know, a little lonely? What if you don't want to go it alone? Well, technology has completely changed the game here, turning trading into something much more social. Get this, it's called copy trading. You can literally link your trading account to a professional trader's account, and then, whenever they make a trade, bam, your account does the exact same thing, instantly and automatically. And the process is actually pretty simple. You pick a platform that offers it, then you get to browse through profiles of traders and see their actual track records and risk scores. You decide how much you want to allocate to copy them, and that's it. It's all automated. You're pretty much along for the ride. Now, quick clarification. It's really important not to mix up copy trading with social trading. They sound alike, but they're totally different. Social trading is like a giant group chat for traders. It's all about community, sharing ideas, talking strategy. Copy trading is all about the execution. It's automated and you're mostly passive. One's a conversation, the other's an action.
All right, so we've covered your timeline, and we've talked about trading with the crowd. But there's another whole layer to this, the actual tools you decide to use. And this is where things can get a lot more advanced.
We're talking about financial derivatives. Now, the key thing to understand here is that a derivative isn't something you own, like a share of Apple stock. Nope, it's a contract, and its value is derived from the price of something else, like a stock, a commodity like gold, or a currency. And this world is huge. You've got things called contracts for difference, or CFDs, which are really popular, plus options, futures, swaps. The list goes on. They're all just different ways to speculate on where an asset's price is going without ever having to actually own the asset itself. Now, the main reason people are drawn to these is one powerful and very dangerous word: leverage. Leverage lets you control a huge market position with just a small amount of your own money. And yes, it can absolutely magnify your profits. But, and you have to hear this part, it also magnifies your losses by the exact same amount. It's a serious double-edged sword. And that word losses brings us to our final and frankly most important section, because anyone who talks about the rewards of trading without talking about the risks is doing you a disservice. It's like teaching someone how to drive a car, but forgetting to mention the brakes. I just want you to look at this number for a second. 81%. According to data from one trading provider, 81% of retail investor accounts lose money trading CFDs. Let that sink in. This is not a coin flip. The odds are heavily stacked against you. So why is it so risky? Well, a few big reasons. First, that leverage we just talked about. It can wipe you out incredibly fast. Second, this stuff is complex. A simple misunderstanding can be a very expensive mistake. And finally, market volatility is no joke. The market can move against you so quickly, you can suffer huge losses before you can even react. And look, don't just take my word for it. This is a direct quote from an official risk warning. The language is crystal clear for a reason. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. They're not kidding. So over the last few minutes, we've sketched out that map of the trading world. We started on the practice grounds of paper trading, we ran through the different race lengths of scalping, day trading, and swing trading, and we touched on modern strategies and advanced tools. So now you have the map. You've seen the different paths, and you've seen the very clear warning signs, which leaves us with one final crucial question. It's not about whether you can learn these strategies. The real question is, knowing the very real risks involved, should you? And that's a decision